Bismillahirrahmanirrahim. Hi everyone, a very warm welcome to all of you for the series of video about strategic business reporting, group accounts, a particular practice question with a new exam structure introduced by ACCA exam team with September 23 exam. I am Hussain Qazi, facilitator for the subject SBR, AFM, NFM. Students, very focused. The objective of this particular series of session is about a published question of ACCA called Sample Exam 1. For your knowledge, immediate after September 23, ACCA SBR team published two sample exams, sample exam 1, sample exam 2, two questions. So with this series of videos, you will be able to get the knowledge of sample exam 1. September 23 exam, question 1, 30 marks, name of the question, autograph. So students, you will be able to find this question with your CBE platform, the name, left side top, SBR International Sample Exam 1, September 23. Name of the question, auto company or auto group. So very focused, objective is the practice question of question 1, 30 marks, group accounts, name of the question, auto group. Students, before starting the session, make up your mind that if you people are watching that series of videos, what are the learning outcomes or what the key takeaways you will be able to get at the end of the series of session. Number 1, the session is group account practice question with new exam format. So practicing of the question with the new exam format with a pre-populated spreadsheet and all these things. Number 2, you will be able to learn the SBR exam rules. Exam rules including drafting, calculations, and many more things, including time management and more things. And these rules will support you not for question 1, but rest of the other part of the paper. Means all SBR exam paper, either section A or section B, either question 1, 2, or 3 and 4. Number 3, at the end of the session, may Allah, God willing, you will be able to understand what is the right way to attempt SBR exam questions. Number 4, with this series of session, we will try to read the psychology of the examiner, means diagnosis of examiner report, where we will be able to find what are the do's and don'ts with respect to SBR exam paper. Do remember, always practice and prepare your exams, especially SBR here, according to the examiner expectation. So I will try to provide you the guidance, the valuable guidance that will support you to practice and revise your syllabus according to the examiner expectation. So conclusively, new exam format, practice question, SBR exam rules. Number 2, the right pathway towards the success of the SBR exam, and what the do's and don'ts, or I can say that examiner expectations. So in simple word, the learning outcome with the one statement, SBR quality practice guidance. That's the point. So let's start the session, but we have to focus that the series or the parts of videos based on these agenda point. Agenda number one, we will read the question, and you people must have to know that reading is an art. So we will discuss here how to read the question, what is the right way to read the question, and develop your mindset and save the time. Number two, after that, before starting the question, we will cover some examiner points, some general comments. Number three, then we will cover the part A1, goodwill calculation. The part A1 means then we will start the question with the requirement. That's part A1. Number four, then part A2. Number five, part B, IFRS 5 held for sale conditions. Number six, part B, IFRS 5 impairment, because part B having two parts. Number seven, part C 1 and 2, working with pre-populated spreadsheet. That's called calculation. Number 8, examiner report diagnosis and the marking scheme. So that is what about the agenda of the series of session. So let's start with the agenda number 1. Reading is an art. Yes, the very first thing whenever you going to start your exam, that's called reading. But you know that reading is an art. So what the things you must be very much careful, or I must say here that what are the rules for the reading of the question. Number 1, always start reading the question with the requirement. Quickly read the requirement first and shape up the picture or shape up the mind. So what is the question about? Number 2, highlight, for especially for question 1, highlight the exact reporting date where you stand, at what reporting date you need to respond your answer. Highlight the reporting date. Number 3, read the complete question details, question context. But do remember, read the question context based on the requirement, based on the step 1 you have done. And finally, read the requirement, or lastly, the last part of the reading, read the requirement once again and compose your mind, focus your mind. Okay, now this is the requirement that I have to attend the question accordingly. So that is what about reading. This is an art for the reading. If you follow these steps, you will save your time. Sir, how? Because students who are not able to read the question in a sequence manner. So during the examination, when you are attempting the question, and during attempt of the question, when you go for inside the question and very frequently and during the question, so it's possible that you you will waste your time if you're not able to find the things according to the requirement. Means in the mid of the question, if you enter to the context of the question and then extract the data, and this activity if you do very frequently, so you will not be able to manage your time accordingly. So let's apply this rule with a question. First of all, this is the question. So this is the screen, and you will first the screen you will face this details of the question. Never ignore the main content. Quickly read and identify at least the reporting date. For example, auto company is the parent company of a group. current financial year end 31st March X6. So here you have highlighted 31st March X6 is the reporting date. You stand at that particular point. You have to respond the question with that particular date. Following exhibits, quickly read. Available left hand side of the screen, provide relevant to the question. Okay. Number one, it's acquisition of trailer. Company name is Auto Group. But Auto Group, something about acquisition of trailer. Provides information regarding the acquisition of trailer 1st April X0. So few years ago, that's you acquired that trailer company. Division Z contains information about the disposal of Division Z assets during the year 31st March X6. Disposal of trailer company. Provide information regarding disposal of investment. Draft consolidated balance sheet. So draft consolidated statement of financial position for Auto Group 31st March X6. I know that this is not the requirement. Main screen, limited data. But quickly read it. Don't ignore this. At least identify the reporting date. Now start reading the question. Reading of the question always start with requirement and shape up your mind. Using exhibit 1, A1, part A1, calculate the goodwill arising on acquisition of trailer company. Okay. So at first time, whenever you are reading the requirement, don't invest very much time. Just quickly read the requirement and develop your mind. So first thing is calculation of goodwill. Number two, explain how auto company should assess whether goodwill of trailer is impaired accordance with IAS 36. Calculation not required. Using exhibit 2 accordance with IFRS 5, consider whether asset of the Z division should be reclassified as held for sale during the year end 31st March X6. Discuss the impairment principle which should be applied on the reclassification of trailer held for sale. Calculation not required. C1. Using exhibit 3, pre-populated response option, adjust the draft consolidated financial position for the year end 31st March X6. Answer should consider impairment required on reclassification held for sale of trailer, presenting of the remaining net asset of trailer accordance with IFRS 5. So shape up your mind here. The question is about balance sheet. It's not about income statement. It's not about cash flows. Okay. You should show all working on the spreadsheet. Using exhibit 3, calculate consolidated profit on disposal of share in trailer that would arise 30th June X6, 4 marks. So quickly you have read the requirement now and initially shape up your mind. The question is something about goodwill calculation, something IFRS 5, something about consolidated balance sheet. Okay, now we will move based on this requirement. We will move toward the context of the question. Context of the question. Yes, come on. Number 1, 1st April X0, auto company acquired 80% of the $15 million one ordinary share of trailer company. Consideration transferred comprised cash of 45 million and 1 share of auto company for every 10 shares of trailer company acquired. So in your brain, some points you need to recall. Here the requirement about the goodwill. So for goodwill, cost of investment, cash, shares, market price of auto company shares, 1st April like $0.5. Fair value of identified net asset of trailer at acquisition 40 million. So always read the context of the question based on the requirement what you have initially read. You have already read. Group policy is to measure NCI using the proportionate share of net asset method. So this first context is all about the calculation of goodwill. It's very simple. Number 2, okay. Division Z, division Z, division Z, the activity, division Z, the activity of trailer differed significantly from the group. Okay. To enable group to focus on core activities, Auto decided to sell majority of the shares in trailer companies. So they have decided to sell the majority of the shares in trailer company. Decided to sell majority of the shares. Okay, that is something about disposal. Until recently, trailer company consisted of 3 divisions. Okay, Tuck Force Z. Okay, on 30th September X5. Do you remember your reporting date? 31st March X6. 30th September X5. Third party wheel company agreed to purchase 90% of auto investment in trailer company. The agreement stated that purchase would not go ahead until auto company had disposed or closed down Z division. So number 1, the company name is Auto, that's the parent company. The subsidiary is Trailer, and Trailer Auto has a plan to sell the trailer and the subsidiary. And the subsidiary Trailer has 3 divisions. So buyer already identified of a subsidiary Trailer, but buyer is not interested for one of the division, that's Z. So auto company had disposed or closed down division Z. Not yet made. There was no obvious acquirer of the asset of Z at this time, and it was uncertain how long the process will take. So do remember, one of the division is Z, where auto company wants to dispose or close down, but at reporting date, no obvious acquirer has identified, and it's not certain how much this process of the sale will take the time. Consequently, auto company began to sell individual asset to Z to different buyers. So if the division is not going to sell, that's division Z. So auto begin to sell asset stripping. Asset stripping means selling the individual assets, planning to sell individual assets. But here statement mentioned, none of the individual disposals were material to the group. So even they have decided to sell individual asset, but they were not even to materialize. On 31st March X6, unsold non-current assets were abandoned or transferred to other division, and outstanding liability were settled and trade of Z ceased. Once again, 31st March X6, unsold non-current assets were abandoned or transferred to other division, and outstanding liabilities were settled and trade of the Z ceased. According to IFRS 5, if assets or group of assets is abandoned, it's not possible to declare held for sale. That is the knowledge you must have about IFRS 5. So recall your knowledge. And do remember, read the context according to the requirement. Here the requirement is affected for explanation related to something Z division about reclassification held for sale. So what will be the final answer? We will discuss later, but develop your mindset according to the requirement. Okay, on this date, auto company and wheel continued negotiation for the sale of investment or of trailer company and finalize agreement. Do remember there are two different points. Number one, division Z, and number two, a subsidiary, that's trailer. So at the end of the year, till the year end, negotiation is still continue with the identified buyer, that's wheel company. Trailer company met the criteria to be classified held for sale. If with the examination question something particularly mentioned that's about the accounting standard, here the last statement, trailer company met the criteria to be classified as a disposal group held for sale. So you have to assume that all criteria is met. Now we need to move towards the application of this accounting standard. We don't need to search more things about that, either criteria met or not. It's mentioned, it means done. Once again, this will affect to the B second requirement, something about trailer company. So here the trailer company met the criteria of disposal group. So this is the division Z and the trailer. Disposal of trailer. Now come on, disposal of trailer. Auto company originally acquired 80% of ordinary share of trailer company. Originally, it's also mentioned with the start of Exhibit 1. Measuring NCI using proportionate share of the net asset. Yes. The net asset of trailer company have been included on line by line basis in the consolidated balance sheet. Net asset of trailer have been included in line by line basis on the consolidated balance sheet. Where is the consolidated balance sheet? Here is the consolidated balance sheet with the Exhibit 4. Exhibit 4. Auto Group draft consolidated accounts. Draft consolidated accounts at 31st March X6. This consolidated balance sheet of Auto Group includes the trailer company asset liabilities, all net assets. Once the trade of Z has ceased, who is Z? One of the division of trailer of subsidiary has ceased 31st March X6. Auto and wheel continued negotiation for sale investment trailer. Okay, it's already we have read with the second exhibit. At this date, trailer met the criteria disposal group for sale. Okay, it's mentioned. Now, carrying amount of net asset of remaining part of trailer, remaining part of subsidiary other than other than Z division, a cash generating unit, 31st March X6 as follows. Okay. So if trailer qualify for disposal group, disposal group, so we need to apply IFRS 5 held for sale. All the asset belongs to trailer other than Z division. Other than Z division belongs to trailer must have to reclassify as non-current asset held for sale in the current asset. And all the liabilities is reclassified by the name current liabilities associated with the disposal group. So this is what the point. This is what the point. These are the totals: property, plant, equipment, intangibles, inventories, trade and other receivables, cash and cash equivalent, long-term borrowings, trade and other payables, and this is total. Okay, so here more things mentioned that affect to the calculation part, but we have to read it. The intangibles do not include goodwill on acquisition of trailer, which had a carrying amount of 8 million 31st March X6. Okay, intangibles do not include goodwill on acquisition, which had a carrying amount of 8 million 31st March X6. None of the goodwill related to Z has ceased to trade. Fair value of net asset, trailer company, and transaction cost of sales of shares were 51.5 million and 1 million respectively. Something about fair value of net asset and transaction cost. Okay. Negotiation on the sale between auto company and wheel company delayed the sale until 30th June X6. Oh, what is the date of 30th June X6? That is after the year end. Negotiation now become delayed and tuck and force the remaining division of the subsidiary continue to trade up to 30th June X6 and earn profit of 1.5 billion from 1st April X6 until 30th June X6. Okay. On 30th June X6, auto companies sold 90% investment in trailer, that is 72% of $15 million one ordinary shares, to wheel company with the net proceed 48 million. This is about disposal, and disposal related to the last requirement C2, calculate consolidated profit on disposal. The remaining investment in trailer company held by auto company was estimated to have a fair value 5.2 million for 30th June X6. So this is what about the remaining investment, and that's the disposal information. So number one, identify the date of the reporting. Number two, start reading with the requirement. Number three, read the context of the question in a manner that you need to identify the facts based on requirement. Final point, lastly, read the requirement once again and compose your mind. What is the examiner expectation? And not to ignore anything. Number one, using exhibit 1, calculate the goodwill. Here the mention calculate the goodwill arising acquisition of trailer company. No explanation. 3 marks. And a very simple 3 marks. Number 2, explain. Only explain how auto company should assess whether goodwill is impaired in accordance with IS 36. A2 is only explained to assess whether goodwill is impaired according to 36. calculation not required, 5 marks. Here 5 marks, we need to write the assessment of the impairment. B, using exhibit 2, focus of exhibit 2, here exhibit 2 about trailer and division, and accordance with IFRS 5, 2 points, 6 marks. Calculation not required. Consider whether asset of Z division, requirement about Z division, should be reclassified as held for sale during the year 31st March X6. Focus point, not for subsidy, but the division of subsidy. Only discussion about class conditions related to held for sale. Next point, discuss the impairment principles which should be applied on the reclassification of trailer held for sale. Focus your mind, shape up your mind. Trailer already mentioned the question, qualify as a disposal group, as held for sale. Here we need to discuss the impairment principle for IFRS 5. So B requirement, first for Z, second for trailer, 6 marks. We can split it 3 marks, 3 marks. No calculation required. C1, using exhibit 3 and pre-populated balance sheet, populated spreadsheet option, the consolidated balance sheet for the year end 31st March X6. Means adjust some consolidated accounts. And here examiner mentioned you have to consider impairment required on reclassification of the trailer and presentation of the remaining asset of the trailer company. So if examiner mentioned that with the pre-populated spreadsheet option, you have to consider these points, 1, 2, 3, here 2 points. So you need to incorporate these adjustment as correction or missing figures and adjust the consolidated accounts. Examiner will never ask to make the consolidation, but adjust the consolidation. That point's already covered with my previous video. What the changes, SBR changes. You have to find out from YouTube and you can find it accordingly. You should show all workings on the spreadsheet. Using exhibit 3, calculate consolidated profit on disposal of shares in trailer that would arise 30th June X6 after the reporting date. That is 4 marks. By the way, pre-populated point, 12 marks. So this is what the right methodology to read the question with the 4 points. These 4 points. Read the requirement, highlight the reporting date, read the question context based on requirement, and then compose your mind by reading the requirement. Lastly, read the requirement and compose your mind. So this is what about the first agenda point we have covered, and this is what about the first video of this series of session. Keep in touch with me. You will be able to find a very valuable insights with the next videos. Thank you very much. Wait for the another video. Assalamu alaikum.